Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Last week, I discussed the S&P 500 index, and I told you that following its breakout over its super growth price, that's 3.5 times adjusted book, that we then experienced the usual breakout pullback in that index, and it had stopped within a single point of its super growth price. In other words, the indices themselves act like single stocks. That knowledge is extremely powerful in managing your portfolio, as it, in essence, tells you when to step into the market, and by the way, also to step out again if the S&P were to break below that key support level. Now, whereas the NASDAQ 100 has broken out and is now confirmed by the Standard & Poor's 500, neither the Standard & Poor's TSX nor the Dow 30, containing what I would refer to as the value stocks, have confirmed those two growth stock indices. This looks to be very much of a narrow AI-driven kind of market, and it is not particularly interested in the run-of-the-mill value stocks. Indeed, in the most recent market weakness, both the NASDAQ and the Standard & Poor's have continually performed better than the value indices. Anyway, on that note, let's see what the FANG stocks themselves did in this testing week. But before we take a closer look at the FANGs and what has been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, let's start off with the quintessential artificial intelligence stock. It's got to be NVIDIA. And what's NVIDIA done? Well, it's broken out over its HB6 price, which is 33 times book value, and that is a new all-time high. And I have to tell you that when stocks break out over new all-time highs, they typically have a good carry to go. And of course, we're looking at that acceleration now, aren't we, of the earnings and the fair market value. Turning to Amazon, well, Amazon, look at the fair market value here, the kind of that walking downstairs, and then look at the stock price themselves, or stock valuation. It's been following this walking downstairs, and recently we've been having this nice movement up with the AI movement, and what's happened with Amazon, it's got up to its bubble price where it stopped cold before and is now broken out. Carrying higher, we stay with it. Apple has been riding its HB6 price. That's 33 times book value. We're going to be getting a new balance sheet shortly, and we're going to see what has happened. But one thing I have to say about Apple, and that is to say that when you have a market cap of $3 trillion, no professional money manager dares not have you in their portfolio. So I think the stock keeps riding its HB6 higher despite relatively poor fundamental growth. Finally, Netflix. Well, Netflix, after years of being up in its bubble zone, collapsed almost down to the super growth price. And you remember what I said down there? I said when a stock has been trading in the bubble, falls to its super growth price, almost inevitably we're going to get a rally back to the bubble price, and that is exactly what happened. Well, it got there, set back, but in this this AI-driven growth stock phase, the stock has not only gone back up to its bubble price, but also has broken out, set back, and tested it. Now, Netflix is kind of one of the original FANGs, but it is certainly not an AI stock. So my question is, what's it doing here? Well, personally, I think it's kind of one of the boys. So it's going with the market, despite the fact that it has relatively poor fair market value, and the industry itself is not particularly strong. Meta has climbed after a collapse to its growth price, has climbed right back up to its mid-super growth price, and today is just maybe moving above there. Where do I think the stock may go? Well, if I look at history, I see that in the history of this company, 3 times it has got to its bubble price, and that's where I think it's going. Of course, it's probably going to be aided by reports of the phenomenal growth of its new Threads application here, which Zuckerberg tells us is going to reach a billion subscribers and completely outclass Twitter. Well, we'll have to see. But nonetheless, the stock looks as if it's breaking out, and I think it's heading higher. Microsoft, Microsoft is in a sense the real quintessential AI stock, isn't it? And yet, look at the at its fair market value. Yeah, it's ticked up a little bit recently, but it's just kind of moving higher. I think probably the stock is going to break out over its HB2, but there is a kind of a lack of conviction here. Alphabet continues to dither on either side of its mid-super growth price. And by the way, this is a characteristic of the stock that's been running for the past almost 3 years. Look at what happened when the stock got up to its bubble price, eh? Dithered on either side. When stocks dither, they tend to drop at least one breakpoint, and that's what happened. Well, it dithered again. It dropped another breakpoint and dithered again. Now, with the AI revolution, it's sort of propelled back up to its mid-super growth price and over. But even today, it continues to dither, and that's strange because, you know, if we go back in history to the 3 years before today, and actually the peak in 2021, we see that Alphabet actually was fairly crisp at its breakpoints. So what this tells me is that there is a lack of conviction about this stock, and therefore, yeah, do I think it's going to go higher? I think it's going to be pulled higher, but there is no conviction here that this stock is a superb AI stock, at least not yet. And finally, Tesla, which depending on the day of the week could be either an automobile stock or an AI stock, whatever, is breaking out. Again, I think with a certain kind of lack of conviction here, and that's not surprising because we really don't know what the final verdict on this company may be. Now, to summarize, what happened last week? Looking at the FANGs, do you see much evidence of market weakness? The FANGs have held in very nicely with their heavy focus on the AI excitement. For the FANGs, Amazon, Nvidia, Apple, and Netflix are holding in nicely above their current support levels and look to me as if they want to hold here and head higher. Meta, with its new Threads platform, which has been designed to try and knock Twitter out of the box, may be breaking out today for what may be a final run to its bubble price at 7.4 times book. If one did not own the stock right now, I guess you might wait for confirmation of the shares to actually break out above their MSG price. That's 5.5 times book. But personally, I'd bite the bullet and buy. I should say the same thing for Microsoft, although with less conviction. Alphabet and Tesla have been dithering around their respective breakpoints, but I suspect that the market, and I mean the NASDAQ and the S&P, will pull them higher. So that's a clean sweep of the FANGs. As this is a very heavily weighted group of stocks, I think that it's a pretty safe bet that the NASDAQ and the Standard & Poor's are headed higher. Nothing against the value stocks, which I suspect are biding their time, waiting for the growth stocks to get out of the way. But this does look very much like the period leading into the high-tech stock peak 23 years ago in 2000. However, we're certainly not there yet, so let's just enjoy the FANGs. A final word to any of our viewers who may have come late to FANG Friday and may be wondering what exactly is going on with this SVA methodology that you're watching here today. If you would like a thorough introduction to the analysis, the how and the why it works in practice, then please visit us at strategicanalysis.ca today. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.